Hello and welcome to Livewire Markets. And as the song goes, from little things, big things grow. So it's no wonder that Australian investors love spotting a small cap that ends up becoming a large, heck, even a mega cap. So in this edition of The Pitch, we're going to ask a small cap stock picker to name 4 micro caps that may have what it takes to go the distance. And the man who is tasked with that challenge is Matthew Booker, Portfolio Manager at Spheria Asset Management. Matthew, welcome.
Thanks, Hans.
So why don't we just start broadly? Why should Australian investors consider small and micro cap stocks?
I think what you have down the market cap spectrum is a lot of inefficiency in valuations. And I think some of that reflects the size of the big super funds now, the big industry funds. They're not going down the market as much, and that means if there's less demand, there's more inefficiency. And so we're finding a lot of opportunity down small and micro cap from a valuation perspective. We're also finding that people are crowding into sort of defensive growth names. I think with interest rates being high, there's been a flight to safety, and that actually means there's quite a lot of opportunity down the small micro cap spectrum.
Yep, okay, well, we'll come back to that crowding theme. So within small caps, you talk about the inefficiency, but of course it's all about those individual themes, individual opportunities, right? So what is one theme you are particularly excited about, and what is one theme maybe you're steering away from?
Yeah, we're not a big thematic investor, but we do look at things from a mean reversion perspective. And obviously coming out of COVID, there was some opportunity. We played the travel names. At the bottom of COVID, we recapped Flight Centre, for example, with others. And so we really got into that sort of travel mean reversion type story. I think now there's still been a lag, and if you look at the office space, for example, there's office exposures in the property trust space, which we think are interesting. We haven't owned a lot of property trusts in the past, but we think office could be a good exposure. Just as occupancy improves, a lot of companies and obviously the New South Wales government have edicts out for people to return to the office, and I think gradually over time that will happen.
So I find it interesting what you were just saying there about office rates. I guess if I think about the largest players, maybe you think of companies like Lendlease or Charter Hall. In that small and micro end then where you play, what's an example of a company that you're backing with that office thematic in mind?
Yeah, Cromwell is one that we've bought an interest in. We think Cromwell is a pure play office exposure now, so they've divested their European operations and they've delevered the balance sheet. They're in a position now where the balance sheet is pristine, and they had the actual ability to buy assets at, we think, good returns at current sort of trough prices. We do think that office occupancy will improve over time. It's not going to be mean reversion like in the short term, but over the medium and long term, we think there'll be good mean reversion in that space.
Yeah, got it. And those recurring revenues are so important.
Yeah.
So it's a small and micro caps interview. We can't not do this. Yeah. Tell us about a couple, maybe up to 3 Australian small and micro cap stocks that are doing something special, something unique in their field, something that'll go the distance.
It's a good one. Bravura is a company that we entered a couple of years ago. It was a recapitalisation story, so we and a couple of other funds recapped it at a pretty low point in its history. The reason we do like it, it's got software, which we think is leading edge in the market, and it provides software to industry super funds. So those big funds I was talking about before. And we think it's good software. We think there's a potential for it to take market share in that space. And that's not factored into the share price at the moment. The share price is just reflecting the current membership that they have, the current customer base. So if they can take market share in that space, and I think there's a good opportunity, that could be a significant step up for the business.
Okay, so Bravura is one company that you were mentioning there. Maybe is there another couple of those really special small and micro cap stocks that can go the distance?
So in New Zealand, we own a company called NZME, and it's effectively the Fairfax of New Zealand. It's a market, though, that is, I guess, behind Australia in terms of the property portal side of things, and that's why we like NZME. It owns a property portal called OneRoof. So similar to Domain here, it's the number 2 player in the market. That market is probably 5-10 years behind here, so it hasn't shifted online fully yet. And there's huge upside as that market shifts online for the number 2 player to get bigger, just like Domain has here. So we think there's significant upside in NZME through OneRoof. And putting that aside, we actually think the traditional sort of media assets of NZME are transforming too. So they're going from sort of old world print assets in newspapers to digital subscriptions. The audio assets, the radio assets are converting to digital. And so there's good growth in those sort of more traditional lines of business in NZME as well. And you're getting it at a cheap multiple.
Okay, well, that's fantastic to hear. So you got Bravura, NZ, and NZME, I should say. Finally, we like to think of the largest companies, I guess, like CBA and CSL as ones you could hold forever, or at least close to forever as possible. But I'd love for you to gaze into your crystal ball, considering you surround yourself with this stuff every day. Is there one smaller microcap company you think can grow into a future forever holding, or at least a holding that people will be talking about 10, 15, 20 years from now?
Well, Supply Network is a company we've owned for over a decade. So Supply Network is SNL. It was a nano cap when we first bought it. It now is a true small cap, so it's gone from nano cap, microcap to small cap. It's the market leader in aftermarket parts for trucks and buses, so it's got mid-teen market share in terms of parts for trucks, and it's got probably over 20% market share in buses. We think it's going to remain the leader. We think some of its competitors are losing share to it, and that will continue over time. And if you look at other industries where you've got industrial distributors like an SNL, they get up to 40-50% market share over time. So we think this company can go from mid-teen market share up to that 40 to 50% mark. I mean, you're talking about double or tripling the size of the business, which is significant when you're talking about a company with a market cap of $1 billion at the moment. And over time, it can continue to reinvest in its product set, keep competitors out, and continue to put price increases through as well. So I think it's a forever stock. I think that market's going to continue to grow, and they'll keep winning market share in that space.
I can hear viewers and readers writing that one down already. Okay, Matthew Booker from Spheria Asset Management, thanks very much for coming in and joining us. And thank you for joining us for The Pitch. If you enjoyed that interview, you can subscribe to the Livewire Markets website, as well as our YouTube channel, where you can get more episodes of The Pitch. Thanks for watching. We'll see you again soon.